8 a.m. Central Time. Grain markets are mixed this morning. December corn futures down 2.5 at 409.25. November soybeans down 6 3/4 at 1034.25. December Chicago wheat up 1/4 cent at 563 3/4. December Kansas City wheat down 1 at 576.5. December spring wheat up 2 at 613.5. Let's start off with this SAF story.
U.S. production capacity of sustainable aviation fuel could surge by 1,400% this year. At the beginning of this year, only 2 plants were able to produce SAF, and production capacity was capped at about 2,000 barrels per day. 2 additional plants are slated to come online before the end of the year and increase capacity to nearly 30,000 barrels per day. The White House has the goal of fulfilling all of the U.S. aviation fuel demand with SAF by 2050. It's estimated that about 2 million barrels of SAF will be needed to meet this goal. Production of other biofuels is projected to rise by 50% this year, mainly due to increased production of SAF.
A 1,400% increase sounds crazy, like a lot, but you're coming from nothing. You're going from 2,000 to 30,000. So it's substantial, the increase, but you're starting from a very, very low level. 2 new plants are coming online this year, the way that it looks. Phillips 66 has this Rodeo, California project, and Diamond Green Diesel has one in Port Arthur, Texas. To my knowledge, neither of those are alcohol to jet capable, meaning that they won't be using corn ethanol. They're probably going to be using other things. The plant in the United States that can use corn ethanol would be that LanzaJet plant in Georgia, but they are using Brazilian sugar ethanol, which somehow, don't ask me how or why, has a lower carbon score than U.S. corn ethanol. I still think the future for SAF and the potential for corn ethanol usage is very good, but we've got a lot of hurdles that we've got to get through. We need 45Z guidance. We should have had it months ago, and we don't. And then the second thing that we're going to get to this a little bit later, but if there's, to get back to Trump and Vance and the probability of them being in the White House, we talked about it yesterday, but they very much want to drill fossil fuels, that whole thing, return to American energy independence. Does that jive with this push toward renewables? I don't know, but it could become an issue moving forward, I guess, because a lot of this is very much a Biden thing. So, yeah, you're going to see more SAF, but I don't know that corn ethanol demand is going to increase this year as a result.
The yen spiked on Wednesday. The Japanese currency also saw a notable increase at the end of last week that propelled it off of 38-year lows. The increase in value is causing some to question whether the Japanese government is intervening. According to the Bank of Japan, Tokyo may have spent a total of $38.4 billion over the last week to support the currency. Some traders believe that the recent weakness in the dollar is also supporting the yen. On Tuesday, against the yen, the dollar fell as low as 156.09, its lowest level since mid-June. The dollar has recently weakened due to the Federal Reserve indicating it may soon cut interest rates.
Here's a monthly chart of the dollar if you guys are watching. And you had your big rally during 2022 when the Fed was hiking rates. And now that it looks like they're done hiking rates and they may cut, the dollar's weakened a little bit. But really, through most of 2023 and now into the first half of 2024, the dollar has been very much sideways. The dollar index, this version of it that everybody follows, it's outdated and it's antiquated. You look at the currencies that we pair against the dollar in this index. The euro, okay, we can handle that. The yen, I guess. The British pound, the Swedish, and the Swiss, I mean, could probably be removed. Canadian dollar makes sense, I suppose. There's probably some other currencies that could be included here. The currency pair that matters for you guys, and nobody else really cares about this, would be the Brazilian real versus the dollar. And the dollar has been very strong versus the real. They've got all sorts of problems in Brazil with budget gaps and things along those lines. So this is a daily chart of the US dollar versus the Brazilian real. And this is the dollar rallying versus Brazil. Brazilian currency is very weak. You look at a monthly chart and the trend has been the same. Bloomberg actually ran an article about this exact thing just a couple of weeks ago. This is from July 8th. The title of the article was Brazil Soy Profits Fueled by Weak Currency Deals Blow to U.S. Farmers. I'm going to read a couple things from this article because it was very good, explains it very well. A sell-off in Brazil's currency over the past month is shielding farmers and the world's top soybean exporter from this year's price plunge, giving them an edge over U.S. rivals. The real has lost 11% against the dollar this year, spurred by worries about the nation's budget gap. That, in turn, brings about much more revenue for soybeans than in 2023. The decline in the real has encouraged farmers to boost sales, deepening a rout in benchmark prices that's eroded revenue for American peers. Because Brazil is the world's largest crop exporter, the ups and downs of its currency play a key role in agricultural markets. A weaker real means farmers in the South American nation can better withstand lower commodity prices, which are typically denominated in dollars, than their U.S. counterparts. That would typically encourage exports from the region, putting downward pressure on futures contracts traded in places such as Chicago and New York. And they had a chart here. This only goes through the end of, or I guess it gets into part of 2024. And you see how soybeans priced in Brazilian reals are different than what is on the board of trade, So the Brazilian currency and the dollar strength versus the Brazilian currency, that's our issue. It's not the dollar index that everybody talks about. And I thought I'd mention that here this morning because I don't know if everybody understands that.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video with Brian Split?
Brian Split's videos have been incredibly popular because his analysis has been so incredibly excellent. He ran through corn, soybeans, wheat, and cattle yesterday. I can just tell you that this is must-watch stuff, and it's been very, very, very good. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee. There's no other obligation. Nobody will try to sell you anything else. You'll get our morning email at 5 a.m. Central Time. All of our premium videos come as private links, so there's no login instructions or anything like that. You just click the link and the video plays. It's a piece of cake. It's super easy. You don't need to be tech savvy to figure this out. This is the best way to support what we're doing here. We don't have sponsors. We don't have a corporation behind us. The only way that we're able to do what we do on the podcast and YouTube is because the premium subs exist. If you're a premium sub, we absolutely love you to death. If you're not, you should give it a shot this morning. I'll forward you over a copy of this morning's email.
Temperatures across the U.S. Corn Belt are likely to be cooler than normal. Most of the Corn Belt is likely to run 3 to 5 degrees below normal on average over the next 5 days. Areas of Missouri, southern Iowa, southeast Nebraska, and Kansas may be 5 to 10 degrees below normal. Rainfall is likely to be scarce. Aside from a small pocket in eastern Nebraska and western Iowa, the vast majority of the Corn Belt will see little to no rain over the next 5 days. The 5 to 10 day forecast introduces rain for the southeastern U.S. and some southeast portions of the Corn Belt.
The marketplace appears to believe that this cool forecast is essentially ideal for corn and pollination and that sort of thing. You had your soil moisture recharge in the east. Soil moisture is considered to be adequate in the west, although I know that there was excessive rainfall and flooding, of course, in some areas. USDA will have its drought monitor out later this morning, and there's still going to be some drought on there in the eastern Corn Belt, but it's not enough to really make a huge difference, I don't think. So the trade sees no weather threat here, right or wrong, and sees the weather as benign to favorable, I suppose.
U.S. ethanol production increased last week. Weekly output of 1.1 million barrels was up 4.9% on the week and up 7.2% versus the same week last year. Ethanol stocks were pegged at 23.2 million barrels. The print was down 1.9% compared to the previous week, but up 2.2% compared to the same week last year. Implied gasoline demand was down 6.5% compared to the previous week, but up slightly versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is down 1.2% compared to the same period last year.
That's an excellent U.S. ethanol production number. We're going to see more of that. We're not going to see any big expansion in the production of U.S. ethanol anytime soon, though. USDA projects that we're going to be basically flat year over year in terms of corn demand via ethanol. And corn demand via ethanol is 35 to 40% of the demand base for all corn grown in the United States. It's a big deal, but it just doesn't move a whole lot. And maybe it does eventually if we get this SAF thing moving and we start doing more alcohol to jet, but we're not there.
Bloomberg held an exclusive interview with former U.S. President Donald Trump in late June. The story was ran here this week. Trump said he plans to impose tariffs of 60% to 100% on China. He also intends to implement a 10% tariff on imports from other countries. Specifically, he would like to target Europe with tariffs, partly due to their reluctance to buy U.S. automobiles and agricultural products. Trump is indifferent when it comes to defending Taiwan against a Chinese invasion. The outlook is rooted in economic resentment due to Taiwan taking chip business from the U.S. On the topic of inflation, Trump believes the Fed needs to hold off on cutting rates before the election just to give the economy a boost and essentially make Biden look better.
This is a good article that I would suggest that you read. Is it tilted a little bit against Trump? It kind of read that way to me. I read through the whole thing. It's super long. There's not anything here that I wasn't super aware of already. I mean, Trump wants low interest rates. He wants lower taxes. He wants to drill more, which does that have biofuel implications? I don't know. It's probably a complicated issue. The border, we know where Trump stands on the border. He wants to shut it down. Squeeze enemies and allies alike for better trade terms. We've seen that before. Trump is very pro crypto. If you're a Bitcoin person, Trump and Vance are both very pro crypto. They have some issues with big tech. I would go read through this if you're interested in the political climate. It was a good write-up and one of the more detailed ones that I've seen. What did cattle do yesterday?
They were mostly higher. Feeders range from 7 cents lower to 75 cents higher. Live cattle were 72 cents higher to $1.60 higher. Box beef continued its downward trend yesterday. Choice ended the day at 318.16. That was down $1.10, and select ended the day at 298.44. That was down $3.15.
Outside markets, U.S. dollars about flat. Stocks are mixed. Bonds are off a little bit. Crude oil is down 18 cents in the August WTI to 82.67. Have a great day, guys. We'll see you Friday.